Good afternoon, folks. This is Faris with TwT. It is currently Sunday, August 23rd, 2020. And this is going to be another YouTube video in the series where we just discuss different charts and prep up for the upcoming week. Now, typically in our YouTube videos, we kind of focus on the educational aspect and cutting down that learning curve for day traders and swing traders. In this case, we're just going to be geared towards making money, right? That's it. This is all based off of how we make money off of these charts, what key levels, what trends to look out for, okay? And this is actually a pretty good example of what we do in the TwT chat room, the actual $50 a month chat room. If you want to try out a free week, by all means go for it. It's just twtx.com, and you can sign up for a free week with no payment required whatsoever. Okay, either way, let's get into it. We're going to talk about the Nasdaq. We are also going to discuss gold, since that has been on a pretty aggressive tear lately. And then we're going to talk about three other momentum tickers. And this is the first one where we're not going to talk about pennies, because pennies, even though we had a lot of volume last week, we did not get a lot of follow through. And if you ran your scans this weekend, chances are you saw how dry the penny stock scans were. They were very rough. So again, we're mainly going to focus on large caps and futures today. Okay, so to kick it off as usual, normally we go with the S&P, but we're going to go with the actual Nasdaq futures here, which currently Nasdaq is hitting an all-time high. Not too surprising considering we did see some stronger earnings this past week. And for the most part, right, we have a lot of different tickers that led the way early on. So for example, we had Apple, which lit up on Friday, very high volume. We're not going to discuss this ticker, but it is worth noting. Tesla, which we are going to talk about later. And then a couple of other bigger names, Amazon, Google, basically the big tech names, right, led the way. So that kind of paved the way for the Nasdaq to put it in a new all-time high. And right now we are in the 11,500s, kind of crazy to think about, and up substantially from that low in the 6,000s not too long ago. Now, we're talking about this short term. Short term, it is getting a little bit overextended. However, right, this trend is still intact. And this is the thing that I'm always reminding the chat room of. Every single day at the end of the day, we go over some charts, and arguably the most important ones. Nasdaq is always on that list. And basically this week, I wanted to be bearish on Thursday. I really did, because as you can see, this is usually where the Nasdaq loses steam if we kind of just draw a little rough line here. So I wanted to be bearish, but bottom line, Nasdaq defended the moving average. So one of the big things that I'll be looking at going into next week is how this reacts, or whether it stays above the 8 EMA on the daily. And remember, this is an EMA, not an SMA, so it's going to be more responsive, and it's going to follow the price a lot closer. Okay, so that's that pinkish purplish line right down here. That's the big support that I'm looking at. And then with respects to resistance, we are now in no man's land, right? So I'm not going to sit here and say Nasdaq 13,000 in 2 days. No, that's very unrealistic. That's just me rubbing a crystal ball. What we are going to use is math. So based off the fibs, right, the standard Fibonacci retracements, we get a good idea of where we have support, where we have resistance, right? That's the bottom line. Because as you guys know, trend is intact, right? The 8 EMA is above the 20 SMA. So the pink is above the blue, and price is above both of those. So currently we're aware that the trend is intact. So what we need to focus on is that trend support as well as the other nearby levels. Simple tool that I use in almost every one of these videos that helps a lot with the weekend prep. Switch it to the weekly time frame. Okay, this is the 3-year 1 week. So each candle here represents a week. It gives you a much better idea of how the bigger picture is playing out. As you can see, we are getting the highest close ever, but a lot of the range that we've gotten recently has just been on this prior weekly candle, right? It's not any crazy amount of range, but clearly we have some new support and resistance to worry about here. So if you draw your fibs, you just take the tool, and I've already drawn them up here, but you click from low to high on this weekly candle. So that is from 11,142.25. I'll write it out so that there's no confusion here. Oh, wrong color. So 11,142.25, draw the fibs up to 11,573.5, and that gives you your new levels for this week. Okay, so that means nearby support and resistance, we can erase that now because it's going to give us a whole batch of new levels. That's these blue ones and the yellow up top. Okay, resistance for this week, 11,573.5. That's the high. Okay, and then above that, the first target for this week is going to be 11,675.25. Okay, that's target 1, and that is in green. All right, and then that means the nearest support is just the first fib below. That's at 11,471.75. Also, I told myself I wasn't going to spend too much time on the educational aspect because my favorite tickers are at the end, so I really want to get to that in a timely manner. But if you actually click on the fibs and then check the negative coefficient, that's how you get the target overhead, right? So you can see that green level right in the background there. Disappears right there when I check that box, but if I check it again, reappears, and that's going to be our first target for the week. Okay, easy as that. So Nasdaq actually is not that hard of a ticker to draw up here because we're in no man's land, so we're just going off of fibs and moving averages, right? Which is what we do normally, but we don't have too many historical levels. So target 1, key break, right? That's the resistance. And then this is the first support. This is the second support. All right, sups up here. Okay. So Nasdaq, obviously, since the trend is intact, we're looking for a long. It is a little overextended, but we'll take it one level at a time. Okay, not going to fight the trend just yet. That being said, I wanted to talk a little bit about gold. And actually, this is probably worth mentioning. I'm a big long-term investor as well. Those of you that are in the chat room know that. Basically, I put all of my long-term buys and sells in the chat. I also, write the content for the Bowser Report, which is a small cap long-term investing newsletter. I sold a third of my S&P position this past week that I've been holding since mainly 2018, a lot of it from 2012. Okay, so this is just a long-term position that I'm trimming into the election year. That's it. Okay, just because there's election coming up, it's not a doomsday warning. So I posted that on social media just in case any of you guys saw that on my Twitter. That's why it's not a doomsday warning, just trimming a long-term hold that has done really well. Okay, now for gold, this is a very hectic chart. There's no getting around it. Believe it or not, before this video, I actually tried to delete some key levels. Didn't really work out too well. Bottom line is gold had a huge run up, bigger pullback, and then closed out an inside week, meaning that this week's range was within the prior. Okay, so that being said, this was actually an indecisive week from gold. However, there are two major things to note from this chart. And to be honest, I've looked at a lot of people posting about gold on Twitter, and I haven't really seen that much valuable input, or at least this, right? Everybody's either saying gold to the moon or this move is going to be given back completely, none of which helps me. What does help me is reading the trend, right? Two things. We know we had an indecisive week, and we can actually tell that the price action is indecisive because we put in a higher swing high, right? Then a lower swing low, lower swing high, higher swing low. So let's go over that again. Higher swing high, this is bullish, right? Lower swing low, this is bearish. Lower swing high, that's bearish. If we got one more lower swing low, right? So if we drop below that level, then this would have been a hideous chart. However, gold is trying to bottom out right here with the higher swing low. So what this tells us, just right off the bat, is that the bull case is above this area. Very obvious, okay? And the bear case is pretty much saying, hey, if it doesn't defend this area right here, this is going to get very ugly very fast. Okay, so I would actually rather play this on the short side. However, each dip has been bought up, or has been bought up. Bought is not a word. So just based off of that, what I did this weekend is I zoomed in on the gold chart and I said, okay, what's the line here? What is the line that needs to hold in order for this to stay bullish? And that line for me is a fib at 1918.2. Okay. Now, with regards to the other note that I wanted to make, so we know that's the line for gold. If that, gets cracked, this gets very ugly. The other note I wanted to make is that gold actually sucked for trading on Wednesday night, Thursday morning, Thursday afternoon, Thursday night, Friday. So pretty much Wednesday night onward, right? It was not very good. There was range, but you can't justify range and say, hey, there's enough range to make money here. This is a great day. You need to get fluid price action. So kind of the major takeaway I had for gold going into next week is that we had a very tight range bouncing back and forth. Okay. It looked like it was going to break down and it reclaimed this support again. All right. And clearly it is getting held down here. So what the volume, low volume, and price are telling us is that we have a box formed. Okay. So big picture needs to hold 1918.20. Short term, we have two levels that are providing support and resistance. One is 1937.5. That is short-term support. That is the box low that keeps getting reclaimed. Okay, the light blue line right here. And then the resistance is all the way up at 1961, which is just a historical level. This is a level that, you can draw all your fibs, you can draw all your pivots, all your moving averages. You probably don't see this unless you day trade gold. So swing traders, make sure to draw that up, because unless you were watching gold intraday Thursday and Wednesday, you did not see how mean that resistance was. All right, that was smacking it down every time. So we have about a, 23-point range, 24-point range for gold, which is outstanding, right? That's awesome for day traders. But until one of these breaks, we don't get decisive movement. Okay, so this is the box that you need to have drawn up for next week and wait for a break of either end for a bigger move. Okay, that 4-minute discussion right there can be summed up with that. And then big picture, this is the level to watch. Don't just want to focus on one time frame, want to factor in all of them. Okay. And if you want to pause the webinar and annotate all these levels, be my guest. But the point of these little sessions is to give you a make or break, right? Determine what you want from the chart and then act on it. So those are the make or break levels. We're not going to go over each individual one. It's just too much, right? It's best to keep it simple. Okay. Now, last three tickers, I'm going to write them out here. Alibaba, Tesla, which I'm sure everybody and their mother wants to talk about, and AMD, which is not one that I intended to go over, but I ran a lot of scans and this just kept showing up and showing up. Okay. Now, Alibaba is one of the few tickers that reported earnings this past week. Okay. And while there are some earnings in the next week that I am excited for, they're not really hot stocks. Plus, the earnings are kind of a coin toss, right? They're going to be very high risk, very high reward plays. I don't really feel comfortable going over them. So I want to focus on some earnings from last week. Alibaba was actually my biggest winner on Friday. Gained, I think it was like 250% on some call options. Whether you trade common stock, whether you trade call options, this is an impressive chart, to say the least. And if we're just looking at patterns, so this is the daily chart, right? The 1 year, 1 day. You can see that Alibaba ran up, got rejected, got rejected, got rejected. And now we are testing again. So obviously you can tell why we're going over it. However, this is an ascending triangle, just right off the bat. We have a base building. We keep putting in higher swing lows. And then we have one resistance zone. Okay, not a key level, a zone. This is where sellers keep knocking it down. So the beauty about this Alibaba chart, especially with any pattern that you have a trend line going into resistance or support, whether it's bearish or bullish, you will get decisive movement sooner or later. Whether it's Monday, whether it's 2 Mondays from now, because the trend is moving up, it's either going to crack the trend line or it's going to break out through resistance. And because we have this trend line moving up, it's much more likely that it breaks out. Okay, because the trend is your friend here. So that being said, for Alibaba, loved the earnings. We've kind of moved into this deceiving market state where all these earnings are baked in because the markets are moving up so much. So Alibaba and Nvidia both actually sold off on earnings last week, but with those strong reports ended up making a comeback, and we played the comeback. So the tricky thing here, and just one thing to keep in the back of your head, even if the ticker you're watching doesn't report the best earnings or doesn't respond as well to it as you wanted it to, keep an eye on it, right? It's very likely that it's going to set up later. It just got overhyped prior to the report, okay? So Alibaba here has a very clear resistance zone. It stretches from 265.98 to 268. Basically, I just want a close above this. I know 268 is the high, and it's really easy to generalize this and say, hey, let's get a push through the high for the next leg. But I just want a close above that, and we almost got it Friday. Not quite. If it does get that close, then our next target is going to be, we're going to use the same exact thing that we used for the fibs earlier. Right, we just draw the fibs on the prior weekly candle. I already did it to save some time. And then we check those negative coefficients. Our first target is going to be 271.52, then 274.05. Okay, so the game plan here for Alibaba is either to play it on strength over 265.98, a daily chart close over it, so Monday at 4 p.m., Tuesday at 4 p.m., whatever. Okay, that would give us that level and then that. Okay. If not, we wait for support, especially with the markets where they're at right now. The Nasdaq looks like this, right? It is just getting very overextended. So if the Nasdaq does pull back, Alibaba pulls back with it, we get a really good swing trade entry. Okay, I would almost rather play the weakness, but either way, these are the next two targets for Alibaba. Wait for a close above this level for confirmation, unless you're playing off of support down the road. Okay. Second ticker is Tesla, which, again, arguably the stock of the year right now. Again, you guys know I don't like this company very much, right? I love how the stock trades. I don't like the company just because of its overvaluation. But this is a stock that is surging on the news of a stock split. I don't think this is that ridiculous of a theory, but my theory here for Tesla and for Apple is that they're going to try to keep running up. And maybe this was the exact peak, or maybe next week is the exact peak. But within the next week or so, they're going to split, right? It's actually a week from today, roughly. They're going to have the stock split. I think Tesla's 5-for-1, if I remember correctly. So this is going to go down to, $400, $500. And even though that does not reduce the value of the stock, I don't think it's going to react that positively to the split. I think people are thinking that it's going to run up even more, but it's getting priced in clearly, right? This is when the news came out. And this is where we pushed to last week. And on Friday, we saw a very aggressive pullback into the close, right? If we look at the hourly chart, this was the run up. And then bam, just wiped out the whole day's gains. I loved it. It was a very exciting day to trade. But either way, for Tesla, my theory here is that we're going to see a short-term top, right? I'm not calling a big top for the long run or anything, but a short-term top on the stock split news. But regardless of that, just something to keep in the back of your mind since we're a week away from it. Regardless of that, because of the pullback and the weak close on Friday, I'm actually looking for this gap to fill. So gaps seem like a very complex aspect of trading, but basically it's just mean reversion. It's going back to what we were doing before. So if something gets too overextended, it just whipsaws back before it keeps trending up. So short term, I'm just looking for a move down to 2001.83. The confirmation price would just be under the Friday low, and that's at 2025.05. Now, let me be very clear, because in the Trade with Text chat, we did play Tesla long a few times last week. I am not a Tesla bear. I'm not a diehard short seller. Because of how it closed on Friday, I will watch for the short sell under that key level. It needs to confirm. This does not mean that if Tesla goes up another 500 points next week, we're still going to be watching short, right? We're taking it key level to key level, unbiased, and we are waiting for confirmation. Okay? Because whenever I make these videos and I highlight an Apple short or a Tesla short or anything, I get tons of hate, and I get a lot of people who say, well, Tesla's moved up another 300 points. Now what? Are you still short? No. It's a technical setup. You wait for confirmation under the key level. If it doesn't set up, we leave it alone. Okay? But we create a game plan and we stick to it. So I'm going to set an alert just under that. And we wait for that to trigger to take some puts. Okay? You can see the other levels on this chart. You can pause the video and write them down if you want, but gonna leave it that simple for now. All right. And then for AMD, I'm actually watching on the long side. Believe it or not, I am not looking to play AMD on a breakout. I do not like playing this stock on breakouts, period. I'm looking to play it off of support. There are 2 support levels that interest me, okay? And you can kind of see already where the breakout would be, for what it's worth. Be over there, we would get the push to 87.29. Okay, but I don't like playing the stock on breakouts. It head fakes all the time. So the 2 areas that I'm looking at are 82.51 for a potential swing, and then 82.13. One of which is a key fib, and the other one is the 8 EMA. So very similar analysis to what we used for the Nasdaq, right? Simple as that. So ideally, this moves hand in hand with the Nasdaq, maybe a little bit of relative strength, and we get a good dip buy opportunity. But bottom line for AMD, I am looking for a push back up at least to the 87s. Realistic target, if we do get filled down here at one of these 2 levels, would be 84.02, which is the prior swing high. I know we're already there right now, but we're assuming that we get a better price for our swing trade. Okay, so I'm mainly watching this for a swing. Alibaba and Tesla are potential swings and day trades, right? Tesla, I'm going to be looking at day trade more because it's just a wild bull, just goes crazy. But either way, Alibaba, AMD are on swing watch. Tesla, mainly day trade watch here. Okay, those are the game plans. So one of the major takeaways for this video, guys, is to look at different tickers. If there's no setup, you leave it alone. Don't try to make it out to be something it's not. On top of that, make sure that you are defining what you want and waiting for it to happen. Don't just take away from this video that, oh, Faris in the Trade with Text chat room just wants to short Tesla. No. If it sets up long, I'll play it long. Faris just wants to short gold. That's not true. I traded gold 6 times on Friday, most of which were on the long side, right? I'm just thinking that the short side is more appealing short term. Okay, so hopefully we get what we want from these tickers, and mother markets are pretty nice to us. But either way, I'm going to leave it at that. If you enjoyed the video, if you learned something, if you want me to focus on other tickers in a separate video, I'd be happy to. Just leave it in the comment section below. And then on the actual YouTube channel, make sure to like and subscribe, right? Spread the love a little bit here. But you can also turn on the notifications so that every time I post one, you get notified and you get to see it first. Okay. Either way, hopefully you guys enjoy your Sunday. We got a long week ahead of us. This past week was not an easy one. And good luck to you. All right. Happy trading.